Welcome to the Oilfield 360 podcast. My name is Josh Lowrey. We are coming to you live from the Oilfield 360 podcast studio, which is proudly sponsored by Flecha Azul Tequila. I am joined, as usual, by David Roode. How are you, David?
Doing well, buddy. How are you this morning?
I'm good. I'm stammering a little bit because I'm on camera for the first time where they told me to actually stare into the camera. It's not as easy as you think it is.
No. Why are you staring into the camera?
Well, because we're going to be YouTube now.
Oh, okay.
We're YouTube famous. It's us and Justin Bieber. We're on our way.
What'll be interesting is if our buddy Chuck Yates does that face replace deal of us on the YouTube.
You know, have you played with that app at all?
No, I'm scared to.
It's hilarious.
I have no time and I don't need anything else to suck away what I've already got.
I totally agree with that. I know you're busy. How busy are you right now?
Pretty busy.
Yeah.
Yeah.
Anything going good?
There's a lot of good stuff happening. There's a lot of interesting things happening. We're starting to see the great consolidation to occur and still have a slug of bankruptcies that we're dealing with. But
yeah, we're busy too. I mean, what are we in now? This is mid-October and it's been a beating.
Can't believe it's mid-October.
No, I can't. It's 7. We're on month 8 of the apocalypse. 8 months? We're going to talk to our guests here, but 8 months of this. Nonsense. I shouldn't say nonsense. I know there's a lot of stuff going on, but man, I'm ready for this election to be over.
Yeah.
I'm hoping that cures some of the COVID-ness.
I'm just tired of 2020 acting like, here, hold my beer. Let me show you what else I can do.
Man, those were some funny memes early on, but it's been brutal. So, we've got some guests today. I gotta pay attention to the camera. I can't keep just resting.
We gotta pay attention to our guests.
I know.
We did this
guests,
too.
I got cameras. I got microphones.
Peter
Jonathan's
and Laura,
back there.
We did the limo wall thing. So we have to lower it.
So we have a couple of guests in the studio today, and you guys don't have to worry about the camera. This is the only pressure's on me to do the introduction. Now, if the pressure's off, you guys just be cool. You guys ready for this though?
Absolutely.
We're ready. Okay, so we've got two guests. Two co-CEOs of Waterbridge, which is a midstream water company. We're going to get all into this. Steve Jones is the CFO and co-CEO, and Jason Long is the COO and co-CEO. Welcome, gentlemen.
Thank you. Thanks for having us.
Yes. So I do say your names and identify your voices. That way everybody knows who we're talking about here.
Jason Long.
Okay.
And this is Steve Jones.
Okay, there you go, audience. You got an hour to remember that. So we'll get into this. Have you guys ever done a podcast before?
This is my first time.
My first time. Listened to a few of them, but first time.
You listened to some of ours or other ones?
Some other ones.
What kind of podcast are you into?
Joe Rogan.
Love Rogan.
A little bit of that.
Rogan's good.
Yeah, that's probably the only one I've listened to.
Yeah, so you're into those 3-hour
No,
episodes?
I usually get about 30 minutes into it, and just when I'm driving, just to beat up some traffic.
Joe's amazing. He's made a fortune doing this. Yeah, just moved to Texas.
That's right.
I heard
to
that.
Austin, yeah.
Yeah, to Austin, just like everybody else.
Yeah, that's right. I wouldn't want to move over there right now.
No.
But he's got good perspective. I know when he had Wesley Hunt on, who was on our show previously, they got some discussion around Texas and culture and leave California and come to Texas and we'll welcome you with open arms. So I thought that was pretty good. That's a good one. I listened to that this morning on my jog. So if you felt the earth shaking, that was me running this morning about 5:30.
2020. Yeah. There's a one, Malcolm Gladwell. That's another one.
Yeah,
It's really, if you've read his books,
absolutely,
the Revisionist History podcast, that's a really good one. The audience would probably enjoy as well. So, we are the best podcast if you've never been on one. So
That's what I've heard.
Welcome to that.
Yeah.
You can't go wrong here. We've got a great guy that can edit, so we're all going to look fantastic. We got a lot to talk about. We have.
We definitely need that.
David and I are notorious poor planners. Let me rephrase that. I'm a poor planner. David is guilty by association. And Victoria with Simmons, she knows this. So she did a ton of prep work for us.
We're not going to ask the questions she wanted us to ask.
I just appreciate the effort.
Yeah, that's good effort.
I mean, some phenomenal questions, some background.
I mean, between Victoria and Laura Schilling and some of our other friends that come in here to check on us, make sure we're still breathing and not, starting a fire in the middle of the office or something like that. They
take care of us.
Yeah.
They do. I played in a golf. We were talking about John Daniel off the air, and I played in his tournament last week, and I couldn't believe how many people came up and brought up the podcast. I was shocked by it. Almost every person And there were people that I've never met before saying, oh, I've listened to every episode. And I was like, well, I hope you know that this and that. Like, oh no, I know, I get the jokes. And I'm like, oh, okay, well, this is great.
Doing good.
That's fantastic.
So let me ask you guys a question. And this is kind of a question I think most people would want to know. You know, Josh and I are kind of co-CEOs, if you will, of our little media company. And, you know, the one interesting thing about our relationship is that we wear multiple hats, as you guys obviously do. But, you know, Josh always likes to end the podcast with, you know, if you got any good news, send it to my email address, you know, and all this kind of stuff. And any crap, just send it to Roode at his email address. So which one of you guys gets the good stuff versus the bad stuff?
It's a good question. I think there's lots of both to go around.
Yeah, I was about to say, we probably get our fair share of both of it.
Yeah, I think it's interesting. You know, Jason and I come from pretty different backgrounds in our careers and have very complementary skill sets. So I think that's why it works for us. You know, I've been a CFO, investment banker all my career, had to deal a lot with the back office, you know, kind of boring stuff. And so a lot of that is mine. Jason's been an entrepreneur all of his career. And so he can be more out there kind of driving the growth of the company, and
but
it's a good fit.
Steve says that, but he does a really good job of the latter as well too. So
always have to hand it off though. Everybody knows that if you want to get the deal done, you talk to Jason. You want to get in a fight about it, you call me.
So tell us a little bit more about your background, if you don't mind, Steve, for the audience, and how you got to Waterbridge. And then Jason, maybe you can transition as well and give us a little background and talk about, you know, Waterbridge, what you guys are doing today and what the future looks like, et cetera.
Yeah, it's you know, my background, you know, it's kind of been a little bit of a random walk through life, you know, and I started out actually in technology and then accidentally ended up in the energy business working at El Paso Corporation. And from there, got into investment banking just because I was in a role where I was working with a lot of investment bankers and, you know, saw that they learned so much through what they were doing and had made a lot of friends there. So I moved over to Lehman Brothers back then. I was in the energy group here in Houston, and just at a time when Lehman Brothers energy practice was, it was, I think, one of the top practices at the time and was really growing. I mean, had incredible leadership from Greg Pipkin and Lee Jacoby. And so I got so many at-bats there and learning about deals and different sectors of energy. I ended up focusing more on midstream over time, and midstream M&A in particular. And as I moved along, I wanted to be a little bit more entrepreneurial. I looked at lots of different opportunities to jump over and try to start a company or do something else. Never found the right fit. And then at one point, Maynard Holt from TPH, who I'd been, you know, done deals with before and became friends with, called me and said, "Hey, pal, you want to come over?" And that was when they were first starting TPH, and it was a great time to jump. And I jumped right before Lehman went through the chaos of 2008. So it's good to be lucky sometimes. And then from there, kind of advised myself into a couple of jobs. Advised myself first into a job at starting or Pentex Midstream. Natural Gas Partners was our client. I was helping them raise some money for a small midstream project, and came up with an idea that we should really capitalize one team and one company for midstream build out, and then service all of their portfolio, because they were primarily an upstream sponsor. And they said, well, it's a great idea. Let's go do it. And, you know, put me in as a CFO, but, you know, helped bring in the team. I brought in Tom Karam, who was a former client of mine. He'd been a CEO for a long time, was the perfect guy that we needed there, and brought that team together, which was a phenomenal experience to be able to jump over and do something entrepreneurial like that and build up a company we took it from a piece of paper to an IPO in less than 18 months, and then sold it to Energy Transfer within a year after that. So it was kind of
quick.
Yeah, it was a whirlwind, but worked out great. It's a great learning ground. A lot of my team from Pentex came with me, and we tried various things, and then I got called by 5 Point Energy, who's our sponsor for Waterbridge. They kept telling me they had an opportunity, had a team that was great and entrepreneurial in the water business. And I'd been looking at water as an opportunity. I just didn't know anything about it. I knew it was a good opportunity. I just didn't have a team that was technical in water. And, here there's this opportunity to take my back office team on the legal and financial side. We could come over and join up with Jason and his operations and entrepreneurial team. And it was just a perfect fit.
Yep.
That's a quick turn there. Really. I mean, you're talking how long did you stay after the IPO?
Well, after the IPO, I can't even recall how long it was. It was less than a year, maybe 9 months as a public company. And Energy Transfer bought us. It remained a public company for a little while, and then they eventually collapsed it. But they kicked us out day one, which is not a bad outcome.
Yeah.
So we got to move on and do our next things, and it was a great experience.
Okay, great. So then you're kind of the entrepreneur that they came to join.
Yep.
Okay. What does that look like? Tell me how we got to that point.
So I grew up in West Texas, grew up in Abilene, as we just talked about. Went to TCU. I was in and around oil and gas kind of growing up. Is that's really the only industry.
Let's just stop for just a second and give Fort Worth a little credit.
There you go.
It's the best.
It is the best.
Fort Worth is an amazing city.
Fort Worth is a great place.
I love it. Do you go back there often?
Not as much as I'd like to.
Oh,
not
funky
as much
town.
as I'd like to, but it's a great place. It's grown a ton.
Yes.
Right? Big time.
I'm telling
Especially
you.
since I was there back 20 years ago.
See, we'll edit that part out. We're all my wife and I almost moved back to Fort Worth a couple years ago, and I started looking at houses, and I think it's called Blueberry Hill in that Tanglewood area.
Yeah.
And I said, in Tanglewood's where the families live, but Blueberry is kind of where the college kids live. And I tried to buy a house there. My wife's like, Josh, you've graduated. You can't go back. And I'm like, oh God, it's devastating. I try to get myself back in there.
That's a pretty good spot.
It's a great spot.
Yeah.
Sorry, I've blown your. But as soon as you say Fort Worth, I wanted to jump on it real quick.
No, it's good. It's good to see a fellow horned frog. So
yeah, there you go. All right, so now let's see if you can regain. I'm gonna just throw grenades in here the whole time.
So being around oil and gas, kind of growing up, I was bound and determined to not do it because I saw the ups and downs, and so when I graduated, the Barnett Shale was just kicking off, right? So anybody and everybody was a landman at that time, and I'm just going to do real estate and not do oil and gas. So went and worked for a developer in Dallas. That was my first job right out of college, and come to find out, he ended up with some property in the Barnett Shale where he had the minerals, and so we walked into an oil and gas opportunity right off the bat. And we did that, shot seismic, ended up doing, it was in the city of Arlington.
Okay.
And ended up doing a whole closed loop system where we did fresh water, supply water. We did the produced, we did the crude and the gas, and then we sold that to Range.
Okay.
So got into, as I was wanting to get into real estate, got right into oil and gas.
Instantly.
And so, yeah, instantly.
I mean, there could have been a hotter place though, right?
Yeah. It was good. It was good timing. It was good timing. Went off on my own after that. And, those were the times when the guys like y'all mentioned Double Eagle earlier. We were all leasing land and selling it, packaging it up and selling it. So I had a good family friend that was a geologist. So we worked in the Eagle Ford, we worked in Marcellus, the Utica, did a bunch of stuff out in the Delaware Basin before many people were out there. What I found was I kept getting older and older, and our competition kept getting younger and younger, and everybody had better contacts than I did. So I tried to get into as many businesses as I possibly could to kind of, sustain the ups and downs. And so had a land business for a while. Obviously, like I talked about, we did brokerage work. We also built pads. So construction, we did pads and pipelines and all kinds of stuff like that. And then also had a spooling business where we spooled submersible pumps. So did all that. And, that was still a little boring for me at times. We we had done a bunch of work with Brigham in the past. And so we had a permit. As I kind of back up a little bit, when we were doing land work, a lot of times we would permit these disposal wells and sell them. Right. So we would either keep a royalty in them or, do whatever we could, whether it was working interest or anything. And it was, back then it was purely a service business, right? It was all on trucks and there was no pipelines. Brigham had just come back from selling their stuff in the Bakken and been really successful, both in the upstream side and the midstream side, and had built out a water network up in that area. So we had a permit around some of that new acreage they bought in Pecos County. And went to Bud and Eric Hoover and said, hey, we've got this permit. We think that there's an opportunity to build out some infrastructure in this area. You guys have just done this. What do you think about partnering with us? And I think either Bud or Eric said, you know what, absolutely, we'll do it. And they wrote us a check for 40% of the well right then. And we kind of helped build out some of that system that now is Diamondback's system. I was just kind of on my own at the time. And I said, if I'm going to do this and do it successfully, I need probably an engineer to help me do it. And one of my good friends that I hunt and fish with a lot, his name's Michael Wrights. He goes by Chop. He was a Diamondback at the time and had done petroleum engineer from LSU, had done completions and done drilling. And he was just doing their water business at the time, starting with their stuff over at Diamondback in Midland Basin. And I talked him into joining. I still had the spooling company at the time, so I couldn't really afford to pay him. So I had to pay him through that spooling company, and he was making more money than I was at the time. But anyway, that gave me that engineer and that credibility to kind of go out and grow the business, and that's kind of where we went. We started off with friends and family to raise that other 60% of that well. We had some other permits in and around south of Pecos in Reeves County. So went and drilled those and realized that we were kind of gaining some steam and we, got some contracts with some pretty good operators and went out to raise some money. As we found out, the friends and family deal was pretty tough. Equity at the time was still looking at that as complete service business. But we got lucky and TPH Partners had a water transfer company. It was Bighorn. I think Bighorn was the name of the company, and they were looking for another asset to put in there with it. And so Kurt Schaefer was our kind of sponsor at the time, and we ended up doing a deal with them. They bought out our friends and family group and gave us some equity. And I think it was pretty funny because I think the first commitment we had was like $35 million, which for the water space and the midstream side was a pretty big deal. And we spent that in 4 months. And so Kurt kind of right at that point was like, we need to rethink how big we're going to get this deal. And we'd been talking to 5 Point at the time, and they said, look, you guys get your contract base up. Because at the time when we first started that, it was, to get a 1 or 3 or 5 year contract, the 1s and 3s were there, but anything past 3 years was pretty hard to get. And so said, beef up your contract base and we'll talk about it. And so it was a year on the date, I think, that we did the TPH deal. We ended up doing a deal with 5 Point. So 5 Point came in and bought out TPH and kind of grew it from there.
So for the benefit of our audience, tell us a little bit about Waterbridge and why you're critical to the upstream market and how you have identified yourself more in the midstream business as opposed to an upstream service company.
Sure. I think if you think about the history of water, obviously it was much more of a service business. It was trucks picking up water at tanks, independents, mom and pops, and then going to any SWD that was along the highway and disposing. As you saw the development in the southern Delaware and northern Delaware in particular, the volumes of water that came with those massive horizontal wells was just far greater than what you could handle with a truck. And so that's, what was the impetus behind Brigham saying, we're going to do what we did in the Bakken, which we're going to build, 3 pipes in a ditch. We're going to handle water, make sure it's all, built out. Well, we've just took that early concept that they and Jason and Chop had and continue to expand it. So
Chop.
We've gone from then.
It's a great nickname.
Name.
I've never been called anything that cool.
I know.
Chop.
It's a terrible story behind it too. So it's not even that fun. So,
it sounds cool though.
Yeah,
it
sounds cool.
does sound cool.
Yeah.
Sorry, Chop.
It is.
It's
His
awesome.
name's cooler than he is.
Yeah.
But So we've grown then from that beginning to this massive network of interconnected saltwater disposal wells, ponds, and what it's enabled us to do for producers is that we can handle any of the surges and growth in their volumes. Right. Because if you go and frack a pad, the amount of water we're talking about is just enormous. It could be 80,000 barrels a day or more in instantaneous spot. And you've got to be able to handle that day one. And to do that, you need large scale infrastructure. You need to be able to move volumes around. And what we've built now in the southern Delaware is a system. It's over 800 miles of large diameter pipe. We've got 54 facilities, 64 facilities connected up there. 1.8 million barrels a day of capacity.
So Victoria thinks she's the only one that does research. That's not true. I did research. And my first note was lots of infrastructure. There seems to be a ton of infrastructure that you guys have. That does anybody else, is there anybody else like this that has that type of infrastructure set up? It seems unique.
Not in the southern Delaware.
Okay.
In the southern Delaware, we were a first mover. We moved very fast. And we were able to consolidate a very large platform. Right. So there's really not many competitors of size in the southern Delaware. If you move north, northern Delaware is much more competitive. You have Solaris, who has a large system up there. They were one of the early movers in that market. NGL Energy,
and then OWL.
Yeah.
Right. So there's three groups that were, and the OWL guys were very early on too.
That's right.
Chris and his team.
They may have been really one of the first up there
absolutely.
doing it.
Yeah.
Yeah. Chris Cooper.
Yeah, that's right.
Dude. Yeah.
Good guy.
Yeah, they did a good job, but that market is just much more competitive. We are moving up there. We have our first investments in that region, or we've got a new equity commitment to go after it. So we're coming.
What would you say y'all's limiting factor is in terms of growth? I mean, obviously, you're taking the trucks off the road and building pipeline infrastructure, which has a number of benefits, from just a general safety perspective, given what the Permians like to drive in, but then, ESG components, et cetera. What's kind of your limiting factor? Is it customers, or is it location of disposal wells if you're actually disposing versus recycling? Can you give us a little insight about that?
I mean, I would say our limiting factor has got to be customers, right? I mean, our main competition, other than the two or three companies that we just mentioned, are the customers and them doing it themselves, right? So that was kind of our biggest task when we started the company, was to earn the trust of the customers, right? And that's a big thing to earn. I mean, that you're taking away something that it's not like gas, right? You can flare gas if you don't have takeaway. I mean, the water, you've got to have somewhere to put it. And to Steve's point, if with the multiple completions and now with slick water fracs, I mean, it's at a level now to where trucking is not an option, period. So if you're not there day one with your pipes in the ground, then you've got issues.
I think what's also different about water is where water responsibility exists within the producers. Gas and oil has been so established as kind of part of the marketing group. They were always thinking about the downstream because it's more of a commodity. Water was always thought of as just something to deal with. So responsibility for water always exists, has existed historically within the operations team. They don't want to let go of anything. All right. They just know if something goes wrong, it's their head.
When you say operations team, do you mean operators or operations team of what?
Of the producer.
Okay. Yeah.
Like from the asset level.
Okay.
Completion guys and the production guys.
Okay. They want to control every part of that, and which makes sense because that is such a critical factor in their success and their ability to. It's also a big factor in their cost. Water, particularly in the southern Delaware, because the water cuts are so high, it is a big component of LOE and something they have to manage. So convincing those guys to trust us and let it go. Some of the early customers that we had, like Concho and Centennial, it was a piecemeal process. It was, okay, I'll give you this small contract. I'll give you another small contract. And over time, Jason and Chop and the team never missed anything, didn't miss a deadline, didn't miss a barrel, and earned that trust. And next thing you know, we're handling all of the water for those customers, and we're doing long-term contracts.
It sounds unique. I mean, it sounds like there's still a lot of, and I don't mean to discount the private equity experience coming into it, but it does sound like the company still holds pretty hardcore to its entrepreneur mindset. Is that something that's talked about inside the company?
You have to.
100%. I mean, that's 100% in our culture, right? I mean, you've got to be able to move quickly. I think that we've ingrained that entrepreneurial spirit in just about every employee that we have. And I think everybody is excited to be there and work in that environment.
How do you do that? How do you ingrain that in your people?
We got to, give everybody a lot of leeway, right? And let them make decisions. And I think that's something that a lot of these bigger companies, kind of keep their employees from doing. Our guys have got to be able to react both from a field level and from a corporate level.
Yeah. Interestingly, we've shrunk the size of the senior team from the time that I joined and Jason was there. We've probably cut the size of the senior team down by 60%, at least, and yet been able to push that responsibility out more to that next, level of people to go do their job and be responsible. And that makes a big difference. I mean, it starts obviously on hiring. We hire people who have that drive and want to be part of something that's growing and changing and are excited by that. And that's an environment that some people do really, really well in. Yeah. But it's also one where if it's not a match, it pretty quickly and you have to make a change.
Yeah, and I think it starts at the field too, right? It's empowering those guys in the field to make decisions without feeling like they've got to walk it all the way up to the top. And we have been so lucky that our operations team, because there's, when we started this in 2013, there wasn't a book about how to operate a water system, right? There's a lot of this stuff that we've had to figure out on our own, and it's been impressive to see, how far we've come in the last 7 to 8 years. It's pretty insane.
I mean, that's an eventful 7 or 8 years. I didn't mean to cut you there, David, but that 7 or 8 years, you've been through some times.
Yeah, a lot of times.
It's been a lot, but what's great is there's still so much we can do.
Absolutely.
And, our business is continuing to evolve. Water business still somewhat in early stages. If you look at Southern Delaware Basin, there you have the produced water side where, you're taking water from the production and dealing with it. But then you've got the frac water supply side. More and more of those are kind of morphing together because we're recycling more, taking produced water, delivering that back to producers for them to reuse. That is something that's going to be more prevalent as we go forward. And so this is going to become more of a distribution system business over time than a disposal system. We'll take water from one producer. Our network's entirely networked together. We can deliver anywhere across our system at frac rates to these producers. They can take that. We can help them treat it to get it to whatever spec they want, or they take it raw and deal with it themselves. And that's going to be part of the future in the very near future. And I think that we'll continue to evolve from there. Empowering our employees, one example is we have this young engineer that we, hired out of Pioneer who, one of the smartest guys I've ever come across. And, Hayden.
I was going to say we wouldn't mention his name.
Yeah.
Anyway.
But
he's got a big enough head.
Yeah. But he went out and basically.
We got to call those too.
Yeah. He basically went and was looking at the field operations and how everybody measured volumes and tried to make sure that we had better data. He developed an app, pushed it out to everybody's phones, started getting data directly from the field, and then comparing that to measurement data we had. They've continued to evolve that so that now we've applied artificial intelligence to be able to predict those volumes much greater. And what they've done, and it's been a very short period of time, 6 or 8 months, and it's been just phenomenal. So now we go show our customers that we have much better data on their water flows and what's going to happen than they could ever have. And they're blown away by what we can do.
That's in the last 8 months you've developed this in-house.
That's right.
Yeah. So it was it's just super impressive. I mean, we've got with Hayden and his team and we brought all of our own automation in-house too. So we've got our own control room. We brought a guy named Charles Lame in. And so just the data itself, I mean, we have to have that data, right? And what we found, because the networks out in the field are just unreliable a lot of times, right? And so we're putting our own network in, we're putting our own data sources in with the app, with the Wave tool these guys have put together, and then with our own automation. I mean, we have found just our accurateness on billing is improved, what, 15, 20%?
That's right. Yeah.
In the last 8 months.
Yeah.
That is a very impressive number.
Y'all jumped into what I was going to ask you about, and what type of technology have you integrated into the business? And I think one of the trends that I see from the operators is looking to get a better handle on their cost structure in a much more timely manner, where historically they used to like to play somewhat of a shell game with the service contractors because they were trying to gain some extra income off the float by delaying payables 30, 60 days. But it seems like there's a trend. People are wanting to get a handle on their cost a lot better in understanding that, but also too the data, so that they can think about their entire supply chain. When I think about your business, you touch them on the completion side, and you certainly touch them on the production side, and having better data in an environment that is really constrained by the volatility of commodity prices. You've got to be very lean and mean and efficient and thoughtful about decisions you're going to make. And I think it's interesting to see the industry, not only in y'all's sector, but in others, service/midstream sectors that support the upstream market, how they are integrating technology to help people make better decisions and ultimately help you guys run a even better business as well and continuously improve.
It's been great for us because it's reduced our, it's enabled us to dial in our operating costs and, make sure that we're pushing volumes along our system to the most efficient places. And it's had a huge impact just on that side of it. And then when you think about our customers, so far we've only showed this to a few customers, but you're exactly right. One of the things that they have a hard time predicting is their water cost. They don't know how much necessarily each of these wells is going to flow. And, they can have predictions about it, but we can actually take all the data we have and the AI that we've developed and probably give them a much better sense for what their future costs will be, depending on what their plans are. And so we're actually, talking to some customers about, rolling that out to them and enabling them to access that and us to be able to work with them on that front.
I think it's too interesting as well from the standpoint of, this kind of emerging trend around ESG disclosures. The operators at the end of the day ultimately are like paper general contractors. They self-perform some stuff, but for the most part, they depend on their partners to help them understand things. And, one of the big issues or areas that people are asking for greater insight, which ties into economic efficiency and environmental footprint and all that, is, the consumption of water, the utilization of water, and the production of water. And, because they don't necessarily do anything and they rely on those partners that I think can give them insight in terms of the impact of their supply chain, whether it's related to water or emissions from, diesel burn or natural gas burn or whatever it is. I think that's going to be key. And I know that's one of the things the Energy ESG Council, which is a nonprofit I started to kind of help educate both private and public companies broadly beyond what guidance SASB and TCFD and others have put out there and kind of drive the narrative for the industry. the feedback we get from the operators, particularly the private and small ones, is how are we going to manage and measure this? And the answer is, well, you can go spend the money, or you can find the partners that ultimately have the ability to give you that data and give you that insight to your supply chain that you don't otherwise have. And yeah, it's great for pointing out environmental stewardship, but at the same time, at the end of the day, we're talking about economics here. And the reality is, technology and other things are going to help drive that economic story, which is ultimately going to drive that environmental impact study, whether that's a positive or negative. So is any of what y'all are doing kind of playing to that broader need that seems to be growing?
Yeah, it's a great point.
Yeah, I mean, I think, one thing that we have done a lot less, obviously the ESG thing is huge, right? I mean, and I'll speak to that and let kind of Steve take it, but we do track the amount of trucks that we've taken off the road, right? And we can draw an exact amount of emissions that were pulled off the road because of that, because of the amount of barrels that we're taking on pipe. So giving the operators those true numbers, and that's something that's hard data that they can take back and say, to their folks and say, these are real numbers, right? I mean, we're moving 1 million barrels a day of water through 20 different operators, and that's a lot of trucks.
Yeah. And you think about that too, the number of trucks, going to that, in the general operating where you are, operating in, the infrastructure there is beaten down and tough. And there's a lot of capital that needs to be put into bringing some of these roads back to, decent safe operating conditions. And I think the interesting thing by taking that pressure off those roads, I mean, obviously you're going to have heavy truck traffic regardless, but not to the extent that probably we've seen in the past. And I think that's a pretty valid point. Somebody who's gotten to see the number of auto incidents and unfortunate fatalities and significant
The unique
accidents.
thing too about what we've done with our business is, and you kind of you touched on this a little bit earlier, but disposal wells were always suppose it was a real estate player, right? You're looking for a hard corner. So you're looking for some of the best intersections that you possibly can get. And in these areas, that was creating a ton of traffic incidents, right? And so we can be in field, since everything's on pipe now, we can be in field off the roads. And so we're utilizing lease roads, not these main roads. So that alone is a big impact. And that impacts our crude haulers too, right? When we're hauling crude out of there, they're not on the main highways, they're inside lease roads. And so it's
one of the reasons that we started this podcast was to tell stories that never get told. To me, that's a story that's not getting told anywhere. And with all respect to whatever you guys have done with your press and marketing of that, is that a story you guys are actively telling anybody but your customers?
It's interesting. I've been thinking about this a lot lately, and if you look at a lot of our peers, all of us are trying to tell that story. We just haven't done a great job of it yet. NGL, I think, has done a good job on their website and the way they talk about their business on the water side of talking about the impact. Solaris, we know, is doing a lot on their side to try to position it. And we're going to be doing more of the same. I think we have been less leading with that as our branding. But if you look at it, the water business actually is one of the few subsectors of energy where you really can have that kind of impact. I think everybody overlooks what the energy industry does already. That
Definitely.
It's arguably the safest industry there is. Doesn't ever get much of a notice. I think people focus so much on the E part, and they don't focus as much on the fact that energy employees are better paid, better taken care of. It's safer. I mean, we invest in safety. So that S part kind of gets glossed over in them pigeonholing us as a dirty industry. There are ways that we can work with our customers and make sure that we're all being as clean as we can. Recycling, water use is one of those things that was going to be a greater trend as we go forward, and I think a positive one. Even though the water being used is not it's not water anybody's going to go drink. This is not clean water. It's, coming from, thousands of feet down. It's very saline, difficult to treat to any usable spec other than for fracking. That being said, it is something that is very visible and something that people have a visceral reaction to. And I think we can reduce that as part of the narrative by recycling more. And that's good for cost for the producers.
I actually think that you have one of the more public issues that could be picked up by people that ordinarily would be looking to tear our industry down. And I mean, where environment, I mean, one of the things that David always talks about on the show is, the oilfield, you mentioned hunting already. It's full of people that enjoy hunting, fishing, outdoors. And, we do take care of the lands that we're a part of, and whether that's personal or with our companies. And, water is a hot button topic, right? It's easy to point at an oil company. I'm not pointing at you specifically, just person X, and say, hey, you're not doing it well. And it is, I would be interested to know what traction you guys pick up with that for the industry, because I think that's a very easy thing that both sides of the aisle can get. The show is apolitical, right? We've had a couple politicians on here, and anybody that comes onto the show is like, look, I want both sides to do well. I don't care who you are. We're not looking for red meat from anybody. Just be reasonable, do reasonable things, be good for the environment, be good for the industry. And that's what we want to support. So I would like to do a follow-up on this later on to find out what your efforts yield in regard to, are people paying attention to this? Is this something that they actually care about? Is what kind of, because I look at these stats. I mean, Victoria, her stats were pretty handy as I'm coming through this, and you mentioned the trucks on the road and the heavy infrastructure that you guys have that does keep, like those are, I always joke with people, anybody, how many lives has Uber saved for people not drinking and driving? Yeah. Countless. It's a shocking number of, 21 to or 81, right? Pick a number of people that don't drink and drive, or fewer drink and drive because of Uber. And you just wonder, like, and Uber, by the way, touts that when they go talk about, like, we're saving lives. I wonder how many lives have been saved because of pipelines versus trucks, and how many, the emissions. And
completely agree. I mean, if you look at a lot of the political discussion around pipelines, what people are trying to do, I think, ultimately is say all hydrocarbons are bad.
Right.
So if we can stop the hydrocarbons or make it more expensive, then our alternatives will be, relatively cheaper and more attractive. I think what they miss is they are favoring a less safe solution in the environmental side, safety side, from traffic accidents or even train, rail accidents. The incidences of pipeline leaks, whether it's crude or gas or water, if you measure that relative to the amount of product that's being moved and what it does for the economy, it is such a statistically small number. I don't want to ever minimize it by saying it's insignificant, but there's cost benefit to everything that we do. And I think that's something that gets lost in the narrative a little bit. We think the industry has historically taken a stance of kind of hiding from this. And I understand why. It's difficult to talk about. The other risk you run, which is something we want to balance, is you can also look like you're greenwashing everything, right? We can't hide the fact that, we are part of the U.S., resource revolution. We have become an exporting nation for the first time ever. We are energy independent, and yet it's coming from hydrocarbons, and that is not as...
Steve, even the way you phrased the question needs to change. You said we can't hide from the fact. We shouldn't.
Right.
We are literally making the world move.
Absolutely.
And we're doing it in ways that are efficient. We should be talking about it.
we're also driving a low cost of energy, making modern life possible. And, so you give the guys the little bit of ground and say, okay, we can talk about energy production, but nobody's come out with how are we replacing plastics and chemicals? And there's not solar and wind, while neat technologies, and that's coming along. I think when I talk to other senior energy executives, their opinion on alternative renewable energy sources is, look, we need it all. The reality is there's still a significant part of the world that's still asleep. And energy demand, despite the COVID blip, is going to come back, and it's only going to increase. And the most interesting thing about our business, there's all this pressure for the Paris Climate Accords and all this stuff. I thought it was really fascinating. Conoco came out somewhat. It just felt like they had to mention that, taking only responsibility for themselves, but not consumers, is that we're already exceeding what is called for in the Paris Climate Accords. And the big issue and the elephant in the room nobody's talking about are all the other countries, not to get off on a tangential conversation there.
Slippery slope. It's easy.
Yeah, it's a slippery slope. But I think you do have to get a little loud and proud about what the industry has done, and the low cost of energy relative to everything else. And also too, when you start peeling back the layers of the onions, everybody's having fun with facts and figures. And we've heard recently you can't have your own facts, and it's a shame. And I'm hopeful through what we're doing with the Energy ESG Council and bringing all the various trade groups and the upstream and midstream service community all together to get on the same page, even though everybody's got to survive on their own and hold themselves accountable and build resilient and sustainable businesses. They can all come together and help draw and put out the common narrative about the virtues of the energy business in general, principally the oil and gas industry. That's got to happen, because otherwise, I think we, by going individual paths and not coming together, we're almost working against ourselves as opposed to working along with each other. And the opportunity to meet everybody on the street and build a better mousetrap is going to be there, but there is some unity that needs to come together and educate all the various stakeholders, the institutional investors, the customers, the general public. If not, I think we're going to have some really tough times ahead of us. But I am amazed and surprised, and I'll shut up in 2 seconds, and I'll ask you guys about this, is how the industry, even without regulation, self-regulates itself in a way, either due to investor sentiment, public sentiment, and then just the need to drive a better mousetrap in an economically strained environment. I mean, what do you guys have any thoughts or opinions about any proposed regulation or
Policy
that could be
It's probably a better
challenged in your
question for
business?
Steve.
It's. I think we all know this will be a big couple of weeks here. See what happens, but I think that one thing that does have traction that is going to become a reality fairly soon is flaring regulation. I think that's the one place that Republicans and Democrats may not have enough overlap, but I think Republicans are ready to make that deal to forestall more extreme measures. And so I would be very surprised if there's not some flaring legislation, whether it's state or national, through the EPA going through in the next couple of years. That is, arguably a good thing in many ways. There are big costs to it, though. But otherwise, the idea of, right now, everyone being afraid of a fracking ban on federal lands and things like that, that is so difficult to do and improbable, I think, over any, time frame, that we would forecast out for it. I just don't see it happening. At least I hope that's the case. But I think that we have to get ahead of it. Like you said, we have to be self-policing to some extent. And the majors, and the larger companies have really driven that home. I mean, they've had to some extent, but I think they have done a good job of being more constrained on some of those things. Shell and others already try very, very hard to reduce their flaring. Not because they are told to or made to, but because that's part of the thing that they have to report back to their investors. Investors are going to drive most of this ESG initiatives over the near term, and it's having a rapid impact on the industry.
That's one of the things. We had a guy on the show, and he said ESG. He says it's much less of a green problem than a red problem.
Mm-hmm.
That's exactly right.
Yeah. And I thought that was a pretty smart way of saying it. And because you've already mentioned the E part is much more taken care of than people think of. The S part is much more taken care of than people think of. The G part does need refining, and it does need, there's new leadership though coming into these companies that are, you guys have been through this 8 years. How have I know what the last 8 years have looked like to you. It's been a lot. And I'm sure, we were talking before the show about just being conservative so you can have the cash to remain and stay alive in these situations. One of the things I want to talk, David or you guys have all brought this up. I'm a big believer in strength in numbers. Is there a organization that you guys are part of that you feel is doing a good job to advocate for your, I guess, corporate needs isn't the right word. What's the word I'm looking for? Just as a whole for the industry, which
we've actually our previous CEO was much more involved in those things and was really good about it. We have probably not been pulling our weight on that front and being involved on an industry wide basis, or and it is something that we've recently been talking about. We need to get more involved.
Well, I'm going to challenge you on that because, we mentioned John Berger before the episode. He was the Sonova. So if you hear this, go back and listen to his episode. Very sharp guy. He's doing a phenomenal job advocating for his industry right now. And that was one of the things that we noticed kind of prepping for his interview was this guy is everywhere and where he's carrying the banner and doing a good job. So I do it just as friends of I'm enjoying the obviously the interview and the podcast here, but you guys have a story and there is something to be told. So I kind of just challenge you as a group that would like these stories told more. Obviously the podcast is going to be here for you guys and really just that positive work that you guys are doing. But if there's anything that you guys can do, it does sound like this is a story that needs to be told more. So let us know if we can help. But at the same time, I hope you guys get out there a little bit more and tell this.
Yeah,
I appreciate that
for sure.
Yeah. And when we talk to our peers and, the ones we've mentioned, NGL, Solaris, and Al, and in particular, I mean, we're all friends. We all get along really well.
Very, very small community.
It's a very small community. Yeah. And it's interesting. Somebody mentioned to me recently that we all ought to be working together to define where this industry is going, because what we've found is, no knock on anybody else in the industry, but we are kind of the leaders of the industry. We are the ones who are evolving the way water is being handled, and in between the four of us, we'll manage a huge portion of the water in the largest basin in the U.S.
The line is, if you don't tell your story, that someone else will.
That's right.
Right. And you have a phenomenal story that needs to be told. So
appreciate that.
Yeah, I like it. Well, I mean, what else we got? We could keep going on this.
Oh yeah. No, we could talk about this all day, I'm sure.
Yeah.
So
I echo Josh's comments. I think y'all are doing a fine job in watching you grow, over the last several years, which have been pretty impressive, and I've seen some folks try to get into the game. One question I do have is around consolidation. Obviously, we're seeing some consolidation in the marketplace right now with customers. One, is that a good thing or a challenging thing for you guys? One question. But do you see any consolidation happening in your space as well? Is it necessary, or thoughts or feedback there?
So the consolidation on the E&Ps, right? I mean, I think we've all have seen this for the last 3 to 5 years that it's needed, right? I didn't expect it to be in these times, but it seems like it's still the best thing that, for the industry for sure. As far as is it good for us? I mean, I think, Concho is one of our biggest customers. Concho is also one of Solaris's biggest customers. And that kind of leads into the consolidation of our space too, right? So, there's 2 public entities that do what we do right now, and that's NGL and Western. We talk about this all the time, and there's a limited amount of equity in our space to continue to grow. And this is a business that requires a lot of equity because of everything we've talked about, right? It's the amount of infrastructure. It's continue to handle these large fracs, these large, multi-pad designs. And so I think it'll be interesting. I do think that there are some synergies with a couple of our companies that would fit really well together. Asset-wise would fit really well together. I think everybody's done a good job of kind of staying in their lanes, right? And we, as Steve mentioned earlier, we focused really hard on the Southern Delaware because we didn't have any competition really. We were able to consolidate. We were able to and really it's more of from an operator standpoint. Once you gain that trust, you've got to figure out a way to integrate their assets into your network. And that's what's going to be the challenging thing, right? I think is we've seen that it's not easy. I mean, not all these assets are created equally. And
but is technology helping you kind of help them understand that as well? Because I understand, we're starting to see some more AI and machine learning come into play, involved with a couple of different companies that are kind of providing that as a service to both contractors and operators. And it seems like those service companies that are able to come in and provide insight that operators don't have, or maybe they don't have as accurately, kind of helps bridge the gap and kind of helping them see the values. Are y'all utilizing what y'all have developed for that?
We are. I mean, as we said earlier, this is new technology for us. The integration side, integrating operators' networks into ours, is something that's not new to us. And there's been a lot of companies that have stubbed their toe on that. I do think going forward, having our own infrastructure, having our own automation, the AI piece of this, the Wave tool, there's just a lot of things that we can show the companies that, as from an asset standpoint, is not necessary, right? I mean, I think there's a lot of CapEx avoidance in the future because of that.
Yeah. Well, if you think about, these basins now and how they need to be developed, it's really a land game more than anything else. So consolidation, whether it's trading, plots of land, leases, and trying to block up areas, or whether it's consolidating neighboring properties or companies, being able to efficiently plan for more of a manufacturing approach to development, which is where all of this has trended. It takes so much planning and so much infrastructure, and you have to have blocky positions to do that. So it really does benefit companies to consolidate up for that purpose, if no other. You can't get
the same with recycling too.
Yeah,
right? I mean,
you need critical mass for recycling. You need to have all of it there. You can't go drill a 2-mile lateral if you only have one section, or half a section, and you don't have the rest of it. You've got to be able to trade and make these blocks. So there's a land component to it, and then on our side, there's also there's an operational and CapEx savings that is important. You don't want to go out and duplicate or triple the amount of infrastructure in an area and be inefficient about that. And there is that risk by all of us, competing so heavily.
You'll mention Concho, their client as well. And one of the most impressive things about them, as well as a number of their, neighboring operators, is, you see the the investment bankers that post the acquisitions where either cash or stock actually changes hand, but the number of cashless, land swaps that they've done, as well as a number of others, guys blocking up their acreage, was nothing short of extraordinary. But is that something you guys see in your own business, or are there any land swaps as it relates to right of way, et cetera, for your systems? Or y'all?
I think that's less likely in our business.
Yeah.
I think, for better or worse, we're still in that land grab mode. It is very, very competitive, particularly as you get into the northern part of the southern Delaware and up into New Mexico, and it's just going to be a little bit cutthroat for a while.
Yeah,
we are seeing some synergies though. I mean, we're seeing some areas where some of our smaller competitors are looking for a interruptible type tie-in with us versus spending the capex to put in a system that's probably only needed for a short term, right? So we are seeing a little bit of that. We joke all the time, if we weren't in such a massive land grab 3 or 4 years ago, us and Eagle Claw and Oryx would have probably all got together and bought a bunch of right away together and saved a fortune, right? But that just wasn't the case. I do think, things slowing down has helped that a lot. It's not ideal for any of us, the slowdown, but it really has allowed us to really think about the way we buy right away, the way we plan out development. And I think it's allowed the operators to do the same thing. And it goes back to that manufacturing mode that Steve mentioned.
I think if you're going to be in this business, you have to have somewhat of a contrarian view as well as an optimist view on the space. So
what month did you guys start in 2013?
September, I think.
September 13. I've got a 2-part question. I wanted to, I'm an entrepreneur as well. I mean, I started in June of 13. And that's why I keep coming back to that. I know what you guys, or at least I know the market that you guys have been through. And so to Steve, my question to you is, what has been the hardest thing over the last 8 years? And then Jason, what has been the most surprising thing over the last 8 years? I'd like to take Steve. What has been the hardest thing over the last 8 years?
Well, we probably have very different perspectives on this, because in 2013, I was starting Pentex, and we were then, getting ready, to go public. And at that time, there was already a little bit of a crack in the capital markets for MLPs, which we were going to be. We were just a pure gathering and processing company. And, the volatility that we've seen in the capital markets has been a real challenge. And that's the perspective I come from, as being a former banker and now, CFO. And where we are right now, that's particularly a problem. And that's all the more reason for...
It's a very perfect way to say it.
Yeah, it's all the more reason to have consolidation, right? We don't need as many companies out there, because there aren't enough people who want to own them. And they're not going to own multiple. So people are going to start picking their positions, already have. In many cases, that's a position out of energy. But who's left looking at energy, they're going to favor consolidated positions. So to me, it's been that volatility and the changes that we've seen over that period of time from 2013 to now has just been a roller coaster.
Yeah.
And it makes it very, very hard to plan your business. Private equity made a lot of investments in 2013 that they still own in 2020, and they have no ability to exit anytime soon. So what was a 5-year flip, private equity model,
we probably lost 20% of our audience right there.
I'm sure.
They probably just turned off the power button on their radio as they're driving.
Well, I think the answer is all of us now are trying to figure out what we're going to be when we grow up. And it used to be we were likely to be a public company or sell to a public company. It's no longer the obvious answer. and I don't have an obvious answer for it now.
Now you've got to run a business.
Yeah, that's right.
No, absolutely.
For the long term.
Yeah.
Yes.
And think about all these enterprise risks that people hadn't thought about. I think that's been the most interesting thing. If you can look at positives and all the negativity, COVID, I think, is an example of one of those risks that people had no idea would impact them the way it did. And it's certainly been a conversation starter with some of my clients when we're talking about enterprise risk as a whole. They go, "Oh, that's not going to happen." I go, "What year is it?" And go, "Okay, good point. Okay, we'll build that into our board book. We'll make sure we're thinking about that and putting it in a perspective and at least having an awareness." And that's what's lacking with so many of these companies. But anyways, I don't want to cut off
No, that's
Jason's response to the question.
Yeah. So
what's the most
on,
surprising thing over the last 8 years, Jason? 7 years.
For me, I would say the amount of equity that's come into our space that came in a very short period of time. I mean, there was, we mentioned Al and Solaris and NGO. There was only 3 or 4 of us around that were doing this. And honestly, there's really only 3 or 4 of us around that are still doing this today. But for 2 years ago, there was just a massive amount of capital that came into the space. And it honestly was a good thing because it allowed us to monetize a piece of our company. It allowed, I think, a bigger piece of the capital markets to understand what we were doing. Right, it's telling that story, and that story got told through just equity coming into the market.
We were the first ones to do a large term loan to the debt markets. So a syndicated, investor-based term loan. We did $1 billion loan, which still kind of baffles me that but that was such an education process. So we actually took a very different approach to that, and we had to. We essentially left open that process over a much longer period of time and engaged with investors throughout about a 6-month period, and just left our phones open for them to come and ask us questions. We made them presentations. We would go see them and update them.
A lot of trips to New York.
Yeah, a lot of trips to New York, even when we weren't in the market technically. And it was because we knew it was just this education effort, and we were kind of pioneering that for that market, that particular market. And it, for, now I think people have a much better understanding of it. The problem is in our space, though, not every story is the same. Not everybody approaches contracts the same way. Not everybody approaches operations the same way. It is not as homogeneous as natural gas processing. There is a tried and true approach to gas pipelines and processing and market access, and people understand it, or they think they understand it very, very well. Water, we don't have a downstream. We are the upstream to the downstream. There's a lot of different factors. There are a lot of different things about our business, and everybody can do them differently. So,
yeah, to your point, I think there's a lot of opportunities for continuous improvement, not only in your sector, but every sector. And if you're an investor, I want to invest in the guy who's continuously improving their business, because that's going to lead to sustainable investment, ultimately something somebody might want to buy or co-invest in. But it's amazing how it's both a positive and negative. If you're doing all the right stuff, it's a positive. If you're not, it'll eventually catch up with you.
Well, there were some horror stories early on, right? I mean, some of these, some of that new equity that came to the market that backed teams that got into situations both on the operation side and the contractual side, and that was a tough hurdle for a lot of folks to overcome.
Yeah, but I think there's some accountability and responsibility that has to
absolutely
come to light. I mean, if you're gonna invest in a niche business, you better put your big boy pants on and understand
what you're doing. Yeah.
The nuts and bolts of it, because you will get home cooked if you don't.
Absolutely,
and you should, quite frankly. I mean, but anyways, nobody likes to talk about that. But that's the harsh reality of the business. Not everybody should get a participation trophy. How are you going to do better? The guys that go and constantly, work out and train and practice, they're the guys that are in the NFL and the NBA and this, that, and the other. And the other guys, they might have played, in middle school or high school, and that's
as far as they're going.
Yeah.
Not us, though. We're athletes.
Yeah, we're athletes.
You worked out today.
I did.
I actually worked out today.
That's good.
Ish.
Now that we got these cameras in here,
I got
a 1-year-old plus Josh is putting a camera on me. There's some
serious pressure going on.
Yeah, I'm telling you.
I mean, don't feel too much pressure. I have a gym membership that is just currently being funded. It's not getting any use.
Yeah. Well, there's a lot of people in that.
Everybody's got that.
Well, so I wish we were Joe Rogan. I'd take 3 more hours here. I really would. But one of the questions that we open with is, have you ever been on a podcast? Obviously, no. We're not very creative. We have 2 questions. Have you been on a podcast? And
if there's any advice that you could give your former self or anybody that is thinking about getting into business, that you would like to share with our audience, that nuggets of wisdom, things you would have done differently, things you would not want to repeat again, anything like that.
2 questions. That's it. Those are our go-tos.
For me, I think you kind of nailed it on the head there with if you're going to get into a niche business like this, you better put your big boy pants on, right? And stick to what your goals are and what your plans are, because it's easy to get derailed. And I think as long as you stick to what you're doing and what you can be successful if you stick at it.
Yeah, I think that talking to my younger self, I think that one thing that I've learned over time that you can't. Well, I try to learn every day. You can't take it so personally. People are generally just looking out for their own interests, not in a bad way. Sometimes in a bad way. I tend to be driven a lot of times by an assumption that people are always trying to take advantage of you. Maybe that's my position as being a CFO and living in fear all the time.
I'm the opposite.
Yeah, Jason's the opposite.
Healthy amount of fear.
Yeah, but I tend to manage by fear, which is sometimes a good thing. But I should always work on trying to.
I think
not take it so
you're
seriously.
managed by fear. You mean you don't totally mean that, because actually I feel like you're very inclusive. Just hearing what we're hearing with the employees, managed by fear. You're just what the things that are coming at you.
That's right.
Because you're not walking down the hall just slamming doors.
No.
That kind of fear.
No.
Yeah. No, not like that. No. As a matter of fact, I think it's really that I always, think that the worst is going to happen, and so I, always, internalize that a lot and the pressure of that a lot. And
this is why we work so well together.
Yeah. Jason doesn't.
Yeah.
So I'm the one who worries, and he's the one who makes it happen. So
yeah, I wouldn't say that.
Nice. It does look like a good partnership.
Plan for the worst and strategize for the best, right?
Yeah,
That's right.
No, absolutely.
Yeah.
Well, what'd you guys think of your first podcast?
It's awesome.
You've
great.
nailed it.
Yeah.
You guys did a great job.
Yeah. So listen, we're going to give you a couple plugs here. Your website is H2O
Letter O.
O Bridge. So it's Waterbridge, obviously.
Yep.
And play on H2O Bridge. Okay. .com. Is there anything else that we want to tell the audience that they should look up? Is there? You guys mentioned something earlier on. You said you have a data center. Where is that located? Is that in Houston or?
It's in Houston at our corporate office.
I bet that's pretty cool.
It is cool.
Yeah.
Love to have you guys out and take a look
Yeah,
at
I'd
it.
love to see that.
Yeah.
Yes, I do want to take you up on that because
Do you have an obnoxiously large screen like
We've got about
Cody and those guys?
35 of them.
Really?
Yeah.
Oh yeah, then we definitely want to come see
Yeah,
that.
it's full. I mean, it's
Looks like the
cameras.
future.
You can see, yeah, absolutely. You can see every
Yeah,
one
we
of our
gotta come check
sites,
that
looking
out.
at pipelines. I mean, it's pretty impressive.
Okay. Yeah, I wanted to make sure we pointed that out to your customers too that are down here.
Yeah.
I'm assuming you guys do the customer tours when they want to come check it out
We
as
do,
well.
yeah. We love taking, whether it's customers or potential investors out to the field and
Yeah.
showing them around, because the water sector is so new to people.
Right.
They really can't visualize what exactly our facilities look like. And
I mean, I'll be honest. I want to go see it specifically for that reason.
Yeah, we'd love to have you
that's,
out.
we didn't touch on that, but that's one thing that we definitely differentiated ourselves from others early on is we kind of changed the design, and we thought a lot of it was on our land. And so we, in the past, SWDs have been a bit of an eyesore, right? And they've been on folks' ranches for a long time. And it's always that one that's got the leak. And so we really took a lot of pride in how we build it and continue to do so.
Well, I think you're going to be surprised how many people bring up this podcast to you. It gets a lot more traction than I know David and I expected. We like it. We do view it as a responsibility now. At first, it was just kind of a thing that we did. And that's kind of why just challenging you guys because I do think that what you have is something that can get a lot of positive attention because it is a positive thing. So we'd love to do a follow-up with you guys later on just to find out what traction you guys have gained internally and externally on that. So
absolutely.
Yeah, we'd love
Anytime.
to. Sorry it took so long to get this all put together.
No, it's the apocalypse. What are we doing?
That's exactly right.
Got plenty of time here. Yeah. Got our cameras. We look great. Hell, I'm looking at the camera now.
You did good.
Jonathan back there. How do we look, Jonathan? See, solid.
Next time we'll try some Flecha Azul Tequila.
Yeah. By the way, this is Aaron's shirt too. I am becoming. I think I should just get sponsored by like Aaron Marquez directly, not even Flecha Azul anymore.
Is that one of Aaron's shirts?
This is one of his shirts.
Quail?
Black Quail. I look great in it.
You do.
Yes,
yeah, absolutely.
So, but yeah, no timing. This is what it's about. And really, this podcast is if there's stories that you guys think that we should be telling. Listen. You see him trying to.
He's got blue shoelaces.
My shoelaces. I mixed it up.
This guy's got like a Skittles bag of shoelace colors. He's got purples and blues.
I've got the whole rainbow there.
He's all coordinated.
I look good.
I look like I got dressed in the dark in my office.
Same here.
So David, do you have anything else before we shut it down?
I just want to say, gentlemen, it's been a pleasure having you on, and I enjoyed the conversation. Hope you guys did as well. I probably talked too much.
No, you did great. I mean, I really enjoyed the conversation too.
Yeah,
so
here.
I'm going to wrap us up here if you guys have nothing else. See, here we go. So now I got to go back to the camera, study, and focus here. So everybody be super cool here. This is going to wrap up another edition of the Oilfield 360 podcast. We are, again, proud to be in the Flecha Azul podcast studio. David, amazing job today. Any letters that anybody that didn't like this podcast, send it to David at oilfield360.com. And anybody who thought this was the best thing ever, send it to Josh at oilfield360.com. I won't read anything negative, so might as well just send it straight to David. But gentlemen, truly good luck to you guys. It sounds like you've got a lot going on, and we just wish you the best of luck in finishing off 2020. David, Jonathan, thanks for everything back there. And look us up on all our YouTube channels, all of our social media. And that's it. Have a great day, everyone.
Appreciate it.
Thanks, guys.